Welcome to etvFutures.com. Today is Thursday, November 15th. I'm Caitlin Sisney with your Commodities Open. Crude oil fell more than $1 a barrel in New York after the Energy Department reported that U.S. crude oil stockpiles climbed 2.81 million barrels to 314.7 million last week. It's the first gain in 4 weeks. Crude oil is trading at $92.77 per barrel on the NYMEX. Natural gas in New York fell after a government report showed the U.S. supplies will probably be sufficient to meet winter demand, and crude oil declined. Stockpiles fell 9 billion cubic feet to 3.536 trillion cubic feet in the week ended November 9th, the U.S. Energy Department report showed. Natural gas is trading at $7.78 per million British thermal units. Gold and silver fell on speculation the euro's rally against the dollar may stall, reducing the appeal of the precious metals as alternative investments. Gold is trading at $796.20 per ounce. Silver is trading at $14.715 an ounce. Today we're joined by Bob Yawger from Man Financial. He'll give his short-term outlook for the commodities market.
This is Bob Yawger from MF Global, and the EIA numbers came out today at 10:30, half an hour ago, and the market has subsequently tanked quite aggressively, getting through the all-important 92 even level over the last couple minutes here. A couple surprises in the numbers today. The crude oil, which was expected to be a draw pretty much by most analysts, actually turned out to be a rather healthy increase today, with crude oil stocks up 2.8 million. That can be attributed to crude oil imports, which were surprisingly up quite aggressively this week at up 831,000 barrels a day to 10.49 million a day. That is rather surprising because of the backwardation situation you have that presently exists in the market. It doesn't really lead refiners to import large amounts of crude oil under the current circumstances because of the price curve. It is the front month is more expensive than the back. And so there is a tendency to not want to buy crude now but buy it later when it's cheaper. But we went against the grain there today. Imports up rather strongly, and like I said, up 831,000, leading to the rather large crude oil build this week. Distillate stocks were down 2 million, which was down stronger than expected. Most analysts had tended to believe that we would be down around 700,000 barrels. So the all-important distillate market heading into the winter season was stocks were drawn on quite aggressively. Now that is very interesting, and that could ultimately end up lending some type of support to this market, which is currently under pressure pretty nice. But the heating oil contract down 347 points so far. On the other hand, the RBOB contract, which was up 700,000. Some, I would say, 1/3 of analysts were looking for a slight build, is down 550 points. So as you can see, that heating oil is down, but not anywhere near as much as the gasoline market is, the RBOB market is. Now, some of the interesting aspects of this report are refinery utilization was up rather strongly, plus 1.5%. Product imports were down, however, over 500,000 barrels a day. So that's a very interesting statistic right there. That kind of counterbalances some of the other information. Cushing stocks were unchanged, so even though the crude oil was a build, it was not at the NYMEX delivery point of Cushing. Another interesting issue is that the 4-week distillate demand versus last year was up 0.5% from last year. So overall, all that said and done, though there are some, if you dig deep enough, you will find some bullish issues. The market is off rather strongly on mostly the crude oil build, and crude oil is presently trading around down 200 points at around 92.10. So we are threatening to trade through 92 even and try and get down there and stay down there, but that's the battle that we're fighting at the present. That's kind of the big news right now. OPEC was basically forced to decrease the demand forecast for Q4 in their monthly OPEC report last night. that coincides with the IEA report earlier this week that also cut demand, global demand. So we are seeing some demand destruction here with prices, crude oil prices trading in the 90-plus area. That could be a function of the global economy, amongst other things, is probably the likely scenario. The economy is getting leaned on. There is also the issue of people just not, they're starting to feel it in their pockets. But on the other hand, the people are just trying to cut back also. So there is demand destruction as a result of high prices. And also a lot of the forecasts for warm weather this winter has kind of left refiners to a certain degree not seeking the same quantities of the fact that the heating oil stocks are behind last year is not really as being viewed as an emergency situation as it would if there was forecasts in the future for colder than normal weather into winter. So there's that situation also. That's pretty much it. Has a state meeting will start over the weekend. Anything could become of that. OPEC claims at the present that there is not going to be any news on increase in production, that decision will be saved for the full OPEC meeting on December 5th. What they say and what they do are often two very different things, so you could certainly get a surprise out of the OPEC meeting. So that yet to be seen. That's the future, and that's all I got to say about it. Bob Yawger, Man Financial, MF Global.
Thanks, Bob. That was Bob Yawger from Man Financial. I'm Caitlin Sisney. Join us again for another update right here on etvFutures.com.